it's 6:05, so I'll just call the meeting, well, I'll reconvene the meeting at 6:05, and imagine Jack will show up. So this should be a relatively simple one. We've got the folks from Down Street here, and, I won't characterize what the issues are here, but I do know that they have agreed to present, since it's a common issue that's at question here, that they will all be presented under one presentation. Is that correct?
We can do that.
And it doesn't have to be that way. I'm just going,
Right.
but I assume it certainly doesn't have to be. And we, of course, start with the assessor, who's I suppose prepared to do the same, and that you all are planning on wanting us to waive inspections, since it's really more of a matter of
Yes,
math.
that's absolutely
Okay.
correct.
All right then. Well, it is the same meeting, so Marty, you're still under oath. If I could get you two to identify yourselves, too, for the record, and we can go around and everybody can identify.
I'm John Davis from Evernorth. I'm a senior asset manager.
Christy Velo from Down Street. I'm the financial controller.
So Down Street and Evernorth are in partnership with most.
Who's the other partner?
Evernorth. Okay. We're partners in, I'm sorry, I'm not going to have the exact number in front of in my head here.
I know, I'm trying to remember too.
At least 4 of them
Maybe
of the 8.
of the 8, yeah.
And Down Street is the sole owner of the other ones,
Okay.
or sole general partner.
Well, let me go ahead and get both of you sworn in, if you raise your right hands. Under the pains and penalties of perjury, do you solemnly swear that the evidence you give in the cause under consideration shall be the whole truth and nothing but the truth?
I do.
I do.
All right. Now, Kim, you want us to go around and introduce ourselves?
Yeah,
You want to start?
I'm Kim Chin. Sal Alfano, District 2 Council.
Don
Mark Leopold.
Hi, I'm Mary Hooper, and I wanted to mention and to ask the appellants and the board, during my tenure in the legislature, worked on appropriations issues and in fact worked very hard to bring money to the Vermont Housing and Conservation Board, which funds Down Street and indirectly does work with Evernorth. I don't think I have a conflict, but it passed through my mind, so I felt I had an obligation to say something. And if anybody has an opinion, I think we need to hear it now, and if you do, I can go home.
I think if I could put my 2 cents in, I think it might actually help to have your expertise on this.
For what it may or may not be.
No, I think it'll be beneficial.
Yeah, I just felt that it was important to disclose that. But not seeing or hearing anybody else, so I will stay.
As we go around too, if anybody has any conflict of interest and or ex parte communication, if you would indicate that.
I'm Carrie Brown.
Tim Heaney.
Rosie Kruger.
Bob Gross.
Newman.
John Odom.
Marty Lagerstedt, I'm the assessor.
Okay. And you all received a copy of the rules of procedure that I sent out, correct? Came with the first letter.
Oh. Yeah, I have it. I don't have it with me,
Oh,
but I've
that's
had it.
I'm sure you all got it. Okay, so Marty, why don't we have you introduce the properties on appeal, describe the properties, and give us your report.
So I think what we can do is we'll just go over one. It's going to be, it's not real complicated. On the front page, you'll see that there's highlighted 21 Hebert and 208 Berry Street. Everything that's attached to that is pertaining to that property. And also for the next one and the next one. It's basically just copies of everything.
Yeah, that's
Yeah,
good. That's
I
fine.
saw, yeah, the same thing, yeah.
The first page is going to be The state, probably as Mary knows, has a formula how to calculate subsidized housing. You put in your income, you put in your expenses, it gives you the value. The question is expenses. So on the first page, we have highlighted $141,156 as reported actual expenses. If you'll flip 2 pages, on the back side, you'll see another one that says $157,750. So this is where the issue is there are some reported expenses a little further down on page 5. It's circled and highlighted. And this is the difference between the 2 reported expenses as reported by the reappraisal contractor and as given by the downstreet folks. So the difference in the 2 reported income, the expenses, does everybody see that 13,000 in bad debt and then 3,321 in miscellaneous administrative? Does everybody see that? That's the difference in the value in reported actual expenses. So that's where the differences are coming in assessed value is based on what's allowable for real estate expenses. The reappraisal contractor informed me that they couldn't get a description of what the bad debt and the miscellaneous administrative fees were. So, excuse me, so they were discounted, and that's where we come up with the value. On the second page on the bottom right-hand corner is going to be the assessed value as assigned by the reappraisal contractor of $924,000. The sheets as reported by Downstreet gives a different value of $762,000, which is down the bottom right-hand corner.
What page are you on?
The second page right here gives a actual expenses of $141,156. That's down the bottom right-hand corner, gives us a value of $924,000 for that project, as reported by the reappraisal contractor. So that's page 2. If you flip to the back of page 3, the reported expenses there as provided by Downstreet differ by roughly $16,000, and that's where the difference in assessed value is. And this is going to be the same case for all the properties. They're highlighted. The expenses in question, there's, as you can see, the report from the accountants there to read over. The expenses in question on Exhibit B are circled and highlighted. And these are going to be the same for all of them. One last, is everybody okay with that?
Can I just see this?
Yeah, please.
Sorry.
Yeah.
Can I ask, the report from the accountants, is that accountants employed by the appraisers? Or
That's somebody Downstreet uses.
No,
Yeah.
this is third-party certified public accountant
Okay.
audit, which is,
I think there's probably an extra, there's an extra packet, I think I can give you of all of them.
okay,
Yeah, I think
well, more,
so.
I just want to look at what,
Yeah.
Is there some law or ordinance that tells you what's allowable?
yes,
As I understand it, there is, but the reappraisal contractor wasn't able to get a clear answer on the 2 that are in question.
should you not exclude the bad debts?
I thought I did. I'm re-adding it right now to check, but I
Okay.
thought I did.
Right. I don't know when you want me to chime in.
Please.
Questions, John?
Yes, are there questions for the assessor? I wasn't sure if you were done yet.
Yes.
So am I understanding correctly that if we could find out if they present evidence about what those are and we determine that those are allowable, then then it's pretty straightforward that it would be the
Yeah,
difference.
if we can come to an agreement on the expenses, then there shouldn't be an issue. But like I said, the reappraisal contract tried to dig into it and couldn't find those as being legitimate real estate expenses. There's an explanation on there of, just as management payroll, workers' comp, training, phone, internet, various things at the very bottom of Exhibit B, but it wasn't specific. Sir?
So you're saying the expenses were found, but they were not deemed legitimate expenses?
For real estate expenses, correct.
So all of the expenses were found, all $16,000 plus dollars were found, but deemed by this appraiser not legitimate?
Not legitimate real estate expenses, yes.
Okay.
Is this a legal question?
There should be some legal clarification somewhere. It's over my head. That's not a determination that I can make.
This is a unique situation so as far as I know from speaking to others.
But if there's a law that says, well, you can include one, you can't, and there's a dispute as to whether these fall on one side of the line or the other.
Yeah, it still has
Suppose
to
we
go
should
through
start
the,
with a lawyer.
Supposedly, I was told by the reappraisal contractor they were following the statute of what's allowable and what's not allowable.
You had-
so let's finish with the questions for
I'm
the
sorry.
assessor real quick, and then we'll.
Yeah, so when I don't know if this is okay, but I looked up the instructions for filling out that worksheet, and it didn't really help me. What it says is expenses means the operating expenses ordinarily associated with an income appraisal, such as maintenance and repairs, including reasonable reserves for replacement, management costs, and supplies. Mortgage payments, including interest or amortization associated with such as mortgage payments, capital improvements, and depreciation are not expenses. And that's what it says in the instructions. So I don't know if there's more specific guidance in the statute, but it sounds like the idea, if I'm hearing this right, is that the appraiser looked at this and said, bad debt and miscellaneous administrative expenses are not something that you would ordinarily count as legitimate operating expenses.
Correct.
Is that right? Okay.
Yes.
I did not.
Any other questions for Marty?
However, I didn't mark it on my sheet.
Feel like I do have a question, but I'm not sure what it is, so,
You feel that way every day.
yeah. So just to make sure I've got the nub of the problem, so the core dispute is whether or not that and miscellaneous administrative expenses can be counted as expenses against.
Correct. That's the difference.
That's the only question.
And it sounds, it's only 15,000, 20, whatever that number is, but then when you add in the,
Yeah.
it makes a big difference in the test value.
So, and then the question is, what is the assessor's evidence that this should be disallowed? And you're saying that the appraisal company, their interpretation of the statute and associated information was that this says this is not allowed.
Correct. And I'm relying on them and their 20 years of municipal reappraisal experience. They're covering, they did Montpelier's reappraisal last time in 2010. They're familiar with St. Johnsbury has the same, type of low-income housing. So I'm relying on them.
But did they give you a citation or any direction as to what they were referencing to determine that?
They referenced Title 32, Chapter 21, Subchapter 004, that actual expenses incurred with respect to the property that shall be provided by the owner in a format acceptable to the commissioner. So he's not the commissioner, I'm not the commissioner, but this is being presented to the commissioner, obviously. So they didn't feel that it met that criteria.
So it's Title 32, Chapter 1004.
004. I can give you a copy.
1004.
Yeah.
Yeah, I'm just going to read it. Thank you.
Your cedar weight.
Yes.
Your cedar weight.
There was one late addition to it. The very last one didn't fall in the first 7. 34 Main Street, the French block above us. Same situation. Discrepancy in expenses are circled on page 2. And along with that one is attached a property record card for that particular property. That property is carried an assessment of $485,800 since 2019.
Sorry, Marty, do you mind repeating that? We had-
No, not at all. Yeah, of course. The last number, the 8th property did not, it's not on the front list of 7. It is separate by itself. It's the French block of 34 Main Street above Abishon. Same situation, the reported income. On the front page is given by the reappraisal contractor. Second page is the disputed, or the questioned expenses. And the third page is as submitted by Downstreet. Any questions about that last one?
What was the reason for including the property record card?
That one's been carrying an assessed value of $485,000 since 2019. And I just wasn't sure why it was questioned before, so I was hoping to get an answer from them tonight. So,
I'm not sure this is relevant, but was this an issue in 2010 or the last time you did?
I would have to check with Steve. I don't know. I'd have to check. Bill, the contractor, is actually in Italy right now. I have to wait till he comes back to pick his brain about it. I would assume that there was some, work figuring it out of what's allowed and what's not.
I don't think they appealed any of them in 2010. This is the first time.
Mary?
Could you give me the citation again to the,
Yeah, can I just run it over to you?
or maybe the...
You probably understand this better than I do.
Tell you on this one, they subtracted the back twice because I did the counting and they subtracted it again.
Can I speak?
You will have a chance.
Okay.
And then the other argument we made that miscellaneous admin, because this is the stuff that's in there. Which is all.
Yeah, I assume so. 32, 34,
That's
81.
the other expenses in this one.
Unless anyone has any
The only
questions for
one I
me.
could say is the maybe the
Ready to
social
go for now?
services, which I did,
In this
which
packet,
those are
there's
small
a
amounts.
page
Yeah, on that.
citing
Yeah.
the statute that you're relying on.
No, Mary has a copy. That actually looks like Jack has a copy.
Yeah,
as well.
I have a copy, and we can ask Sean to get it out to people if you want, but it's 32 VSA, section 3481, subsection 1B. And that's the definition section, and it defines appraisal. 1A is appraisal value, and then B sets forth the methodology for computing the appraisal value for this kind of housing.
And I understand that there's an appeal from us to a court.
You can either go to the court or to PVR.
to the property evaluation and
But presumably the judge
Review.
unscramble this legal issue.
Yeah.
Because this seems to me a purely legal issue, and I don't feel very confident to unscramble it, whatever they say about it.
Well, I would say, I mean, this is a matter of process too. The burden of proof is on the appellant.
Yeah.
In that sense, the benefit of the doubt sort of goes to the assessor. I don't know if that, so I guess that should inform our decision if we're going to do
My
that.
problem is, he could be giving a brilliant analysis, but I have no way of knowing whether it is or not.
Would that be part of the appraiser to be part of an expert in this situation and not?
Yeah.
Essentially, yeah.
Yeah, so
So,
it's like that's our lawyer's opinion.
Are we ready to hear from the taxpayer? I apologize, everybody. I thought I had this down for 6 o'clock, not 6:30, so, I mean, 6:30, not 6 o'clock, so here I am.
I should have called. Here I was fretting that you were in a ditch somewhere.
Nope, I survived that.
That's good.
So,
I,
let me just say, from my own perspective and probably
Yep.
other perspectives, this is one of those explain it to me like a 5-year-old situations.
Okay.
Why did what they did, why is what they did wrong?
well, I have not recently read the Vermont statutes online in this particular thing. However, my instructions to you were, Christie, here's how I approach this. I have done this for almost as long as this law has been in effect. I have always excluded bad debt as an expense because it is the write-off of uncollected rent from previous years that will never be collected. So you essentially say, I know I'm never going to get paid this, so I'm going to expense it in the current year. It's not an expense. So I'm not disputing that. I don't know about the math because when Christie is looking at this particular property where you did that math, she excluded that in her analysis. And we think that it's possible that the appraisal company did it twice. Okay? And that's possible. And the other admin expenses, Christie has a listing of what they are. And they are fees that we have to pay to the finance agency, the Vermont Housing Finance Agency, which charges fees for monitoring that the program, the low-income housing tax credit program is complied with, both by physical inspection and file inspections. Bank fees that we pay to banks, which are not, they're not,
It's to process payments.
to process payments of tenants' online payments. $405 of social services and training for their staff that they built to the project. So those are what the admin expenses are. I don't know that the appraisal company, I don't know that they reached out to, they didn't reach out to me. I'm unaware if they reached out to Christie to tell them what the miscellaneous admin expenses are. They're not in the audit. They don't typically go into that level of detail in an audit because they lump those expenses together. So I'm not disputing at all that bad debt should not be included. So I'll agree with that. And I don't know if there's some, and honestly, I've done probably hundreds of these analyses, and it's not difficult to make math errors. However, I know on the properties that we share, I went through them to help Christie with them and double-checked the math and got to a point where we came up with a valuation. We have this spreadsheet that shows there's discrepancies, and we weren't really clear. We came to Marty to say, Marty, I'm not really sure why there are different values from what the appraiser company did, the appraisal company. But you didn't have them here for us to be able to ask them. So, in the cover letter, we are following every other thing where we're excluding the other expenses that are not to be included, including amortization, depreciation, debt service, and any capital improvements that we make, because we are instead, as the statute states, the required deposits to replacement reserves, which I don't want to get into details with that, but that we're just basically, these properties are funding an account to be able to handle capital improvements that happen throughout the life of the property. So when we have to replace a roof in the future, we have money saved up to actually do that. And it doesn't come out of the operating expenses of the property as a result.
So do you say you're not counting those as expenses?
You count the deposits to the replacement reserves.
Okay.
That are required by the funding sources, essentially, or the partnership agreement. But you're not including the expenses that you pay, the capital expenses that you have are excluded.
Okay.
Okay?
So you're not double counting it? You're not counting it, it goes into the reserve?
No, anything that goes into the reserve, anything that comes out of the reserve is not included in expenses.
Gotcha.
Because it's not an operating expense. It is a capital expense you're using another fund to pay for.
Tim?
Kind of on the small child or golden retriever line, I'm just trying to figure this out, because to me it's very foreign that real estate is evaluated as an accounting exercise. Clearly the numbers are part of the evaluation, but there are other factors, and it feels like we're reducing it to an auditable accounting exercise. I guess I don't understand the rules for this. Are they different than other properties we're reviewing?
Yes, the Act 75 is the law that requires that properties with a housing subsidy covenant are required to have used an income approach where,
I understand.
okay, so, and we're not using the income of the property as the basis. We're using the size of the units, the fair market rents in the area where they are, and that, in one of your things, you'll see that page that looks like this. I can't see it from there. One of those, right?
There you go.
That says for residential rental property that is subject to housing subsidy covenant, blah, 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 and it's a spreadsheet that the State Department of Taxes has online that you plug in your other income, essentially, the type of units you have, and the actual expenses you have from an audit. And it comes up with a valuation. So it's a mathematical situation. So that's essentially how Act 75 is the rule, and that Act 75, it's called Act 75 worksheet that we use.
And is this produced by the tax department?
It is produced by the tax department. So we can come in, and there's some things we can change and some things we can. We change the unit numbers, whatever utility allowances are, those are things that the tenants pay for, and that's an allowance, not actual cost. We don't know that. We have to, but that's based also in the Act 75 worksheet. As another tab that tells you what the utility allowances are for your area and the size bedrooms. And then your other income that you have, you plug in that number, you plug in your reported actual expenses. You're presuming there's a 100% valuation because you're reevaluating the whole town, and then it gives you a listed value. It's an income approach, but it's not an income approach that anybody else would use to come up with, right? So it's like a specific approach. It's not,
Fiction built in. Yeah.
I'm sorry, what?
A little bit of fiction built in.
Yep,
Yep.
so,
Well,
Go ahead.
in this particular case, it's a $300 argument. You agree that the bad debt can't be included,
that's correct.
so it's a $300 argument.
Well, I don't know that.
With the issue, well, there's a couple of things. I mean, the issue is that because I double checked to make sure, because I excluded the bad debt already. So the calculation that was given to me for the first one that we did, I figured up the difference, and basically the bad debt expense that I already excluded was excluded again. Yeah. Because I already had left it out of the calculation.
You folks ought to be able to
Figure that out, right?
I think, so the reappraiser contractor was trying to get an explanation of the miscellaneous
Right. Which I
and whether that was allowable.
Which I did send on some of the attachments that had the breakdown down below of everything that's in that line.
Okay.
And I think I sent it for all of the properties with the exception of French Block. I don't think I sent it for that one, but I sent it that breakdown for all of them except that.
Yeah, and I know they are on his, these are copies that he gave me, so he did communicate with you, but still, I guess, didn't accept your answer, so.
Right. Right.
So that's what we need to figure out, is how to get past the miscellaneous expenses. Is that really real estate related?
Right, and then confirming that the
math is right.
and confirming that the bad debt got subtracted twice. I mean, based off of what I just calculated, it did, at least on that first one.
Can we just go to somebody at PBR and get an explanation, or someone at the tax department?
You have a district coordinator for?
I do, yes.
I'm sorry?
I do, yeah.
Okay.
Yeah.
I've talked with them, so in my years of doing this.
I have a question of Marty.
Okay, Kim, then Sal.
Are you saying you don't know whether this is double counted or not, and have no way of verifying that as you sit here tonight?
No, I got information from the reappraisal contractor a couple of days ago, and they're sure that their information is accurate. And
So
it should
they're-
not be double counted.
They're claiming it isn't double counted.
Correct.
Sal.
So my question is for Downstreet, do you have the list of expenses for all of these properties?
I do, yes.
And is it double counted or not?
The one I just did is, yes.
Which one's that?
That was the first
top
one,
one.
the 21 Hebert and 208 Berry Street is double counted, because I recalculated it while you were explaining some of the stuff.
In the expenses? Those two
Correct.
expenses?
Yeah, that difference of, a difference of 16,229 is, which actually is, I'm looking at a corrected sheet because I kept being told that maybe we need to subtract social services, so I did subtract that. So my numbers are off by just that much, which is only like $400. The difference between those two comes out to the 13,273, which was the bad debt expense, which I already excluded, and then the miscellaneous admin expense. So that is the difference between the numbers that, of the 141, 146, and then the numbers that's on that sheet.
It's really on these two sheets, I think, if you gave me.
Yeah, well, yeah, because this number is excluding social services, so that's where that little bit of difference is, but it's like a 375 difference.
Sal, did you want to follow up on what you just heard?
Well, I mean, if
And Donna has
we have
one up too.
if we have a list of the expenses that were used for these calculations, and the bad debt is excluded, then it's just a question of the other admin, right?
Of what can be included with the
You
admin.
have lists for every one of these
I
properties
do.
tonight that shows line item, everything in there.
Yes.
So
Donna, sorry, Jude, And then Mary, I think.
Well, we have a lot of reports here from your audits. Are any of those numbers we can take that are?
Well, you have to, unfortunately, you have to pick through them.
No?
Yeah, they're,
No, I'm just talking about that we.
Yes, you have all the audits.
You do.
You have all
From
the,
her,
but
an actual source that can say, these are the numbers from this page in the audit that went into this, that adds up to this.
yes.
Yes.
I had sent, I don't know if you have a copy of it, but I had sent, well, some of them I just put a note of the breakdown. Some of them I attached the detailed breakdown. I did it two different ways, which I don't know why, but anyways, the info is all there, but yeah, so the auditors do lump that miscellaneous admin, but I always know what's in it because I have to know what's in
Well,
it.
so the numbers don't really show the numbers, you have to do something to.
You do have to break out where the numbers came from, correct, yes.
I feel like this is a question for the auditors and this chief financial officer to get together and hash it out. I just feel like I certainly don't have that expertise with the math that you do.
I don't know what you mean by with the auditors.
The auditor's saying you should.
The assessor.
Oh, the
Yeah.
assessors, okay, because I was like, well, okay.
Yeah.
I was thinking our
It
auditors.
just feels like there's a difference of opinion between our assessors and this particular person, so I feel like they're the ones that need to hash it out.
Mary, you had your hand up.
Well, it was to suggest that this just seems to be a matter of fact, of needing to lay both parties' facts out side by side. And we can't, I don't know how we determine if that debt's been double counted here, for example. We have no ability to do that, whereas I assume the appraisal company does. And so I wonder if we can't ask, before we even appoint a committee or have a conversation about how to go forward, instead just ask for additional information to confirm what each property is and get agreement on, or find out the areas of disagreement.
John?
Yeah, and this is, I share the same concerns, and just sort of to think out loud about the process. My concern is that as soon as this part shuts down and we've asked all our questions, assuming we're going to do what everyone has been assuming and forego the inspections, that we go into the deliberative period. And when we go into a deliberative period, we got to make a decision. And if we're not in a position to have those numbers laid out, then how do we make our decision? But I also then am concerned if it's just a matter of getting you all together again, that puts you in a position, I feel like, of having to withdraw from this process and work directly with the assessor, and that's an act of faith too. So I'm just very concerned about how to proceed.
And Kim, I'll get to you right after that. I don't think we necessarily would have to do that. I think we could suspend this hearing and say, you people sit down and figure this out. You know, one of the things that occurs to me is that the statute says that one of the things that comes into this is actual expenses incurred with respect to the property that shall be provided to by the property owner. And so, is there a dispute about what's countable as actual expenses? You know, that could be a factual determination that we have to make if there is a dispute, and it's not clear to me whether there is. But I agree, I don't see how sitting around this table we can do this. Kim?
I think we should suspend this hearing and direct the parties to work together. And if they're unable to appoint a competent, mutually appoint a competent CPA to guide them, come back when they shouldn't hash this out. If they need some third-party help, they should be instructed to get it.
And while we're on this point, since John, you raised that question, Downstreet, at this point, are you waiving the inspection?
Yes, waiving the
Okay,
inspection.
so that's on the record.
Because it's all
That's-
numbers, right?
That's what we were all talking about, but
Yeah,
wanted to make sure it's on the record.
yes.
We would waive an inspection because the basis for the valuation has nothing to do with the physical condition,
Right.
unfortunately, at all. It's tied to
Good with that.
Go ahead.
John, Mary?
Sorry.
Yeah, no, and just to make a note, again, just to remind people for process, if we do put this aside and then return to it later, we need to be cognizant of the fact that if by the time we return to it, the executive order has been lifted, then, as I read the statute, we have to have inspections of all the locations, regardless.
Well, it can be pretty, I think those inspections might wind up being pretty cursory if we have to be done. Mary?
Drive-by inspection.
I'm not sure that it's necessary to hire a third party, and so I just didn't want either groups to think that they have to go out and do that. I think it is really a matter of people sitting down side by side and saying, yes, we agree, or yes, we double counted, or no, we didn't. And then if you need help, go find the help you need, but.
They're already saying they didn't double count.
No, I agree.
Well, but they
But
can
the
look at the
assessor
numbers
says
together. Yeah, right.
So, yeah, and ideally, what I'd like to see them come back with is like a sheet of paper with each property, what they say, what the dispute is, and then we have something we can decide.
Yeah, yeah. So it's clearer to us for the Bianchi block, this is the dispute. We agreed to this and we continue to dispute this.
Yep.
And it's easily laid out for us to understand.
Rosie?
So I did hear that the miscellaneous expenses, that was one that was in question, where the assessors were saying that's not allowable, and you're saying that these are expenses incurred in your real estate. Is that feels to me like that's something for us to decide. And you had mentioned what those exact expenses were for the first property, but I think maybe we want to hear what the exact expenses were.
Right, because it is a little different for each one, because they're broken out a little differently for each property. So miscellaneous admin for that property includes those things that we discussed. Sometimes there's more or less in another one. It just varies. Most of them always have, if there's the LIHTC fee, which was what you talked about with the tax credit, that's on the majority of them. Their portion of our property management software is on almost all of them. The bank fees line really incorporates charges that have to do with we have a way that our tenants can pay online, and we incur the cost of the expense of taking those credit card and debit card payments. So that's what those charges are, so the tenants don't have to pay those. And then some of it has to do, we also have like our site management, their portion of payroll and training, and then for some phone and internet is also included in that miscellaneous admin. So they're all expenses that are part of the daily operations.
So yeah, Barry Street, if you look at the bottom of the page for Barry Street, there's a whole
Yeah, that whole list.
list of things that are more than what's on the Hebert Road
Yeah.
page.
Because some have a lot more of a longer list, but they all have a list somewhere in there. They all, that's provided for all of them.
And so there could be an argument for each one of those. Well, those are not
Right.
legitimate expenses as defined in the statute, right?
So those are allowable expenses?
Well, I don't know the answer to that, but
One side says yes, one side says no, so we'll get some clarity.
Perspective on the property side, I said, you know, this is a decision you make, you choose.
Yeah,
But I don't think that's, in
yeah.
the market society, I don't think that's normal.
yeah, and it says actual expenses incurred with respect to the property. And so it's kind of broad and kind of vague, so So I don't know what the answer is. Mary?
So I was presuming from your statement, I made a leap, maybe, but that you're taking essentially downstreet's administrative costs and allocating them out over the property.
Correct, yes. But it's only for, not all administrative costs. Shouldn't say administrative, it's property management costs. The administrative cost is not in there. It's the property so when I say like some of the payroll and that's the property management, the property managers, not my income or executive directors or any of that. It's just the people who are directly working with the property.
Yeah, so that's an interesting question then to us as to what's in and what's out.
Donna?
Well, we have a lot of sheets here for the audit that I don't have any idea why they're really here. When it really comes down to this form sheet where our auditors have reported actual expenses on one side and another side it says what they're reporting. And to me, those are the backup of these two numbers, the 157.75 on one and the 146 something on the other. The backup of those numbers to me is the only thing I need to know. That's what differs. And then we'll know if indeed whether that 13 shows up. Just give me a list of that number. Here we go.
And then we can vote, we can make a decision, vote on those.
I could. That's my question.
Well, the entire audit is provided to whoever, we're providing the entire audit because we don't, we're providing the entire audit so that the audit is there, and I can't be told, oh, you only gave me 2 pages of the audit, and even though that might show everything that's needed, I don't know that that's necessarily all that's needed. There may be something else I need to see, so that might be overkill. Typically what we do is provide a cover letter, we provide the state formula, the Act 75 worksheet, and then the entire audit.
Carrie, Mary, Kim, sorry. It's okay.
Is there any chance you could direct us to some spot within this audit that could show us where you got your total operating expenses of 144? I know not.
Which property are we talking about now?
Are there some numbers we could add up and get us to the 144?
I think the hard part with that is that we do have to exclude some things like the bad debt. We also have to exclude, the real estate taxes are actually excluded on that as well. And any loan interest and any mortgage and interest payments.
Are they listed in here though?
They are listed and they're excluded.
So if we were to cross them out.
So
and then-
yeah,
and
so
then
you'd
add
have
everything
to.
else up, we'd get to 157,750.
Right, which property are you looking at?
I think she's looking at Bianchi.
Bianchi,
Sorry,
157, yep, okay. Yeah. So if you went through that and excluded, the bad debt line, and you excluded the property tax, excluded the interest on mortgage payable and interest on notes payable, excluded depreciation expense, and I'm trying to make sure I didn't forget anything that needs to be excluded. Then that's everything that should be excluded. Then, we forgot the other part. You have to add in what was transferred for replacement reserve, and it does state that in there that you can add in the replacement reserve requirement. So that's 12,400 and, that was not 12,480 on that, was it? No, that was 3,121, right? No. Why do I have that written over here? Hold on, sorry. 1040. No, it should be the 12,480 is how much was actually put into replacement reserve. So you do have to add that into that number after you exclude the other. And that's that's where the numbers came from.
Kim, then Bob.
I just wonder, it sounds like the parties have not had a real discussion of these questions.
No, we have not. I did not know where they got their numbers from.
And
It came from you,
I
Bill.
think there should be some written presentation on both sides after you meet and see what you can agree to, because this is mind-boggling for me. There's no way that I can
You can't wait through it.
give you any. So
No.
I'm going to renew my motion that this,
I'm sorry, the appraisers circled what they took out. It's very straightforward. We may not agree with the numbers, but they took out
That's the
bad
dispute.
debt
There's
and the
two numbers.
miscellaneous.
Right.
It's right there, that they took out.
See
The
it.
only
No, I don't
question
think
is
we
whether it was
That's the
duplicated.
problem. I haven't seen one.
that isn't contested.
You guys want to see?
Yeah, we
Well, I mean, why
haven't
don't we-
seen what
so
the
it sounds like we're
appraisers
the second,
did. Yeah,
Oh, go ahead.
It sounds like we're going to end up getting together.
Yeah, I
So
think
I'll give
so.
you a packet tonight to take with you of what their discrepancies are, and then we'll figure it out.
And Bob, you have a question, you had your hand up.
Yeah, it was sort of on the same line as, was there any informal discussion at all?
So Marty and the two of us met, I'm sorry, I'm not going to remember a date, but in the last
Grievance.
2
Beginning of
months
August.
at the was,
Yeah.
well, the grievance hearing, and then, you know, you got the flood, and we're over here after the flood, so it was after the flood.
It was after the flood that we met, yes.
And I don't think you knew at the time exactly what their, I don't know, we did not see, hey, this is what they're saying they are excluding that we are including. So maybe that's the best thing to do, is to say, we need to sit down and talk about those, because I don't think we had those. And if you can give them to us, and then we can go through and say, okay, here's the, because at the beginning of the process, when Christy and I were working on this, I basically went through each of the audits and said, pick this number, this number, this number, this number. Exclude this one, don't include that, don't forget to add this, and came up with what the valuations were based on that. So then we provided a cover letter with the sheet. But I don't know what the appraiser contractor, how they looked at those numbers differently than we did.
So, yeah, our conversation after grievance was between the contractor and I thought he said Christie specifically, but he said he spoke to somebody. He still didn't understand what those miscellaneous
Which I did
expenses were.
talk to him about, and we
Yeah.
did discuss potentially eliminating the social services line, which is actually a very small amount, which I have no qualms with. But even recalculating with those figures, which I actually have as well, it's still a huge, significant difference in the evaluation.
Okay.
So,
Then I think we should probably
yeah.
get clarity from somebody at the tax department. I mean, between the three of us, I think we can figure out what's allowable, what's not,
yeah.
and then save everybody the aggravation.
So Kim has made a motion to suspend this hearing and come back. Is there a second to that?
I'll second it.
And is there any other discussion, Donna? I don't think you like that, but is there any discussion about Kim's motion? Right. All those in favor signify by saying aye.
Aye.
Any opposed? All right.
Can I comment after the fact?
Sure.
You're doing what you do. I apologize in a way, because I don't, I think what I attempt to do with the cover sheet is explain these 6 things are included and this is excluded. And I don't know whether I have to literally circle every number on the page of the audit and which I did in advance, in addition to including the entire audit, or in the cover letter, explain each single cost as indicated on the, obviously I've never had to go through like this much detail in the past. I have had times when it's been, some small change, but
Sure, I get what you're saying.
Yeah.
And what I would say is that we can't tell you how to present your case because the taxpayer has the burden of proof.
Right.
But you can see from the conversation
Well,
that
and-
people are really
I
kind of
totally get
lost.
it. And it's not an uncomplicated thing. As I said, I've been doing this for a while, and you're learning things every time you do it. So, my apologies.
And this is our only case for tonight. So we're in recess. It's 6:58.